Sanjay Sinha, founder of Citrus Advisors, joins us. Morning, Sanjay. Thank you very much. There is been this relentless selling over the last 2 days. First, what are your trader friends telling you? Is this just a temporary lull in selling, or will we see, a bottom in place and perhaps once again that 8100, 8400 trading band resuming?
I feel, that is what the market also expects, that the previous bottom of the market that we visited recently, which was about 8,000 points of the Nifty, may not necessarily be the final support that the market will hold on to. It might sink below that. If you see the 3 points which the Reserve Bank of India pointed out as concerns going forward for the economy, the monsoon, crude prices and the international events are also the factors which confront the capital markets also. I think at this point of time it is important for us to take a call as to how these 3 factors will play out and whether they will converge together. I think we will have a very, I would say, dismal scenario for the market in case all these 3 factors turn out to be negative and they happen together. I think what could be the best case scenario would be that maybe 1 out of these 3 factors could be negative, the others would not be. I think in terms of the spatial rollout of these events, the first thing that we have to contend with is the monsoon, which in my opinion, we've not even seen the onset of the monsoon. So how can we actually come to a conclusion that it is going to be deficient in the first place? Monsoon has to be measured on 3 parameters. A, the quantity, B, the spatial spread, and third, its impact on the crops. I think all these 3 factors will not get, markets will not get to know these factors at one go. It will be spread over 3 to 4 months when we will actually get to see the impact of these factors. As far as crude prices are concerned, I think with $64 per barrel as the fulcrum, I do not expect a scenario that we can see a 30-40% appreciation in crude prices from the current levels. At best, maybe 10%. And if you've seen the budget papers, they have also factored the subsidy, assuming crude prices to be at $70 per barrel. So till that point of time, I think we are in comfort zone. As far as the international scenario is concerned, I think it's made up of 2 primary concerns. One is the Greece event, and the other one is the Fed rate hike. I think these 2 events have come to the center stage on number of occasions, and then they have receded in terms of their importance. We will have to deal with them as and when they come, but I think the Fed rate hike is probably a reality. Only thing is that it might happen between September to December. So I believe that in the next 3 to 4 months we will probably see the market under downward pressure, and I think this is an opportunity which the Indian markets present to investors for accumulation rather than for staying away.
Okay. Sanjay, how would you approach the banking space? We've been discussing how a lot of these high leverage group of companies or particular stocks have been seeing that deceleration in the past couple of trading sessions. Would you now be worried about taking exposure to even private banks, which might be lenders to a couple of these accounts, and then there is that vulnerability that we could face in 2016 and hence percolate onto the gross NPLs?
My call on the market's direction is more macroeconomic led, and therefore I expect the economic situation to actually give a fillip to the market. Now, if that is going to happen, then I think the primary beneficiaries are going to be those which are in the financial sector and banks particularly. If that is to happen, these misgivings that we have on both private banks now as well as the public sector banks for the last few months are primarily linked to the proportion of non-performing assets that they are going to be accumulating in their books. I think the outlook on that going forward might be a little more positive than it has been retrospective. And therefore, I think the view has to be positive on the banking sector, and this weakness is probably an opportunity to accumulate. I will not say that you should go biting into banks as a pack, but I think it surely you should surely nibble and accumulate in this weakness, which in my opinion could be lasting for 3 to 4 months.
Which ones? I mean, would you go with the public sector banks as well? In the private sector banks, would you grade any?
Lata, that would depend as how strong-hearted are you. If you want to take an extreme contrarian call, I would say pick up the public sector banks because the delta there will be higher. If you want to play relatively safe, then the private sector banks are where you should be picking your stocks from.
Okay. What kind of a bottom you think the markets can take to? Do you see what 7,800 kinds of levels? You sound optimistic, but what kind of levels should we reasonably expect?
I think it is quite possible that the Nifty might slip to about 7,500 levels because why did the market react the way it did to the RBI policy? I think it's probably arising from the fact that the market has very few reasons to go up, and therefore the upside of the market has got capped primarily because of the valuations of the market. I think the same reason will also arrest the downside of the market. FY15 has been a very dismal year in terms of corporate performance. I am more optimistic on FY16. And given the fact which we are now recognizing that the government unfortunately could not spend much in FY15, and in fact in the last quarter of FY15 they were very stringent in terms of their spending. But FY16 is very different. They are on the front foot as far as spending is concerned. So with that as a beginning, I would expect that we can expect the earnings outlook for FY16 to be comfortably above, 15% above the levels of FY15. So if that be the case, I think the downside of the market gets arrested purely because the markets become very attractive at about 7,500 points of Nifty. And at that point of time, I think if for no other reason, the sheer attractiveness of the valuation will bring in a lot of buying, and I think that is what is going to arrest the downside of the market.
Okay. Last question from my side then, Sanjay. In terms of sectors, which one would you be the most optimistic on, even from a valuation upside perspective? The reason I ask this is because pharmaceuticals saw a downside in the earnings. It was much below expectations. Plus, we've seen, select FMCG stocks come off because of certain news pieces, or because there could be, the risk of a rural slowdown in case the monsoon is below estimates as well. In that sense, or in that light, which sectors could you see maybe premiums rise from current levels and which you think would be the safest?
One thing which has been common to the sharp correction in the stock prices of both pharma and FMCG sectors has been company-specific development. As of now, I don't think the market has fully factored in the impact of monsoon on the sectoral impact on the stock prices. Now going forward from here, I feel that the portfolio now needs to take a slight shift in stance. I have actually been advocating a 60% allocation to the rate sensitive and 40% to the defensives. I will now advocate that one should increase the allocation to the rate sensitives to about 70% and keep the defensives to about 30%. And within rate sensitives, I think the engineering, capital goods and infrastructure should be the one which should occupy the major part of the rate sensitive packs. And I think that should surely reward us in the next 12 to 24 months.
All right, we'll leave it at that. Sanjay, pleasure speaking with you. Thank you very much for joining us. Well, we have to quickly hurry.